Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Airbnb, ticker symbol ABNB. And so they had a pretty exciting week last week, having earnings reported, and yeah, it was pretty volatile around that. So I'm actually going to have to adjust the time frame to the 4-hour candles in just a minute. But first, looking here at the weekly time frame, we can see that the close of the week on February 16th was $152.51, being down on the day by about 3%, but over the course of the week going up about 3%, but having a pretty volatile range to the downside as well as the upside, hitting actually a 52-week high over the course of the past week of $158.27. So it does look pretty good there. However, there are a few things that do stand out to me as suggesting that a top could be in or that bearish action is to come. So I'll go over those things. One of those things is really just based on the close here, that we can see that the high from a couple weeks ago on that red candle day, that was actually higher than the close that we got. So it would have been really nice to see a close above that level, and that is at a price of $153.38. So ideally we can see a weekly close this week above that level, but if not, that could suggest some weakness. So good to be aware of that. Also, I do want to point out that we have seen higher highs in the stock price, whereas with the RSI, it does look like we have seen a lower high. And so that would be bearish divergence. So something to be cautious of, especially looking at this on the weekly time frame, that could suggest that, longer term, maybe over the next month or two, there could be a downtrend. So do be careful of that. But for the most part in this video, I will be going over the daily time frame, the daily candles, and from those I did draw these trend lines. This red line I went over last week that kind of suggested that this could be an inverse head and shoulders pattern, and if I were to adjust this to the highs here based on the weekly candles, that would suggest that the neckline is actually a little bit higher, and we did close the week above it, so that's potentially really good. That would also suggest a larger measured move to the upside. I believe was around 180 that I suggested last week. And then I do want to point out this orange uptrend. I did draw it based on the daily candles, but here it does fit these highs from the weekly candles pretty nicely, and it does correspond to a high that we saw during the after hours. So I will show that in just a minute on the 4-hour time frame, but first looking over at the daily time frame, we can see here that neckline that I've drawn and that we did get a test below it following earnings. So I do think that could have been a really nice dip buy that did actually, if I bring them back into picture, do have a Fibonacci retracement here that I went over last week. One of those levels, the 786 at a price of $143.05, that does look like it was a good dip buying level if prices to continue higher. But I do think it is kind of a cautious time seeing the divergence that we've seen, and also considering the RSI here on the shorter time frame, looking on the daily candles, we can see that from here, we do have a higher high that was formed from this peak over here. And if we do look at the RSI on the daily time frame, we do have, a lower high in the RSI. So that does suggest bearish divergence, but we did get some blips above that. So, it may not be too significant, but, it does stand out to me, especially on the weekly time frame, that there is some bearish divergence there. But, looking at these Fibonacci levels, I do think it is good that we did bounce off of the 786 and that we have respected this red downtrend. And also, there is another Fibonacci retracement that I did do that I'll just bring back into picture, and that actually one of the levels highlights where price went during the after hours. And so the 50% retracement here is at a price of $140.37. And so that level was hit during the after hours. And it also does look like it corresponds with a little bit of resistance here, really just being around the psychological level of $140. But if I do switch this over to the 4-hour time frame, we can actually see that Fibonacci level, the 50% retracement, that was pierced during the after hours following earnings when we hit a low during the after hours of $139.78. So during that stream of the earnings call, I did suggest that that could be a good dip buying opportunity. And then looking at the 1618 extension from that retracement, it does also look like that served as a good guide for where price went in the after hours, with the 1618 being at a price of $161.72. But actually, price did go higher than that, hitting a level of $167.20, which happens to correspond pretty nicely with that orange uptrend. So I find that pretty fascinating. So here, just looking on the daily time frame, that was based on really just the high from February 16th, 2023, and then the high over here from July 31st, again, 2023. And so from those two pivot points that you can see highlighted here, that is how you get that $167.20. Almost perfectly, the price nearly, touched that level, just being a little bit lower than it. So I think that's just really, really fascinating. So I wanted to share that. But so I have mentioned that I am a little bit bearish with the, what seems like bearish divergence, and also having this red day not putting in a higher close when looking on the or not closing above this high. So that does suggest it is a little bit bearish. So I do think that what we see over the course of the next week will be pretty important. Can we hold above 151.16 right here, this high from before the formation of what looks like this inverse head? And can we get a close above the high here of $153.38? I do think that is going to be really key. But I do think that, this was a potentially good dip buying opportunity, whether you're looking at $143.05 or $140.37, or, just looking at the neckline. We did close above that. We did close above these levels here, the two highs. So having the close of the week above both of those levels is really good, but, really just be careful with this bearish divergence signal that we're getting in the RSI with a lower high. But if we do see some volatility in the next week, over the course of the next week, if we do see some moves to the upside, this RSI could be making higher levels. So we do want to see RSI reach above 69.22. That was the high here before we started to come down. So do look for that. But that is on the weekly time frame. So we'll have to check back next week. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.